All right, awesome. Thanks, Darrell, and welcome everybody. Welcome Ophir. I'm gonna get to Ophir here in just a moment. And what I wanted to do here is just show, just kind of ask a couple of questions here, plant a few seeds. For those of you that are familiar with the CML tool, you kind of already know how awesome it is. The cool thing what you're gonna see is some new stuff that's been added that is really killer. And then from there, if you've never heard of this, just be prepared to have your mind blown. This is one of those things where when I started off trading, I actually did not know, well, it didn't exist. And so I'm just going to show you a few things. That's really the best way to do this. So here's a stock that I like. This is Roku, right? And I'm looking at this and saying, okay, I love this pattern here. We've got a 4-hour squeeze. We kind of have some time and price coming together here in the near term. So I actually have long calls here, but I'm also conscious of the fact is that on February 20th, which is about right here, in about 25 some odd days, there's going to be earnings. And so I'm trading this right now with the idea like, okay, there's going to be a run into earnings. And always the question is, well, if it does, if Roku comes up right here, are you going to close it out here? Or are you going to hold for a run into earnings? Okay, that's a fair question. And it's not something anybody really knows the answer to unless they can back test it, right? So what I can do now is with this tool is I can just type in Roku and just say, all right, so why don't I put some options here, 30 days to expiration, and I want to do calls. And, right now the, earnings are about 25 days out. So what if I would hold a position right now, 25 days out, and then close it out 2 days before earnings, right? So I'm going to buy a call long, and then let's see what happens. And as you'll see here, that it's like, oh, well, gosh, this strategy doesn't actually work that well. Okay, so really what I'm saying is I look at this and say, okay, that actually wouldn't be a good idea. So if we do get to my targets, I'm going to take that profit, all right? But is there an optimal time to buy calls on Roku, okay, to buy calls on Roku and hold them into earnings? So I'm going to change this back to 15 days, a little shorter time frame, and just say, okay, I'm going to come back over here to customize earnings and say, what happens if I would buy these 8 days out, okay, close it out 2 days before earnings, then what happens? All of a sudden, here's a sweet spot, okay? If prior to earnings on Roku, you were to buy calls 8 days out and sell them 2 days before earnings, if you bought Delta 70 calls, you'd make 104% return. Over five trades, 5 earnings quarters, you've had 3 winners for a total profit of $5,000, 2 losses for a loss of $530. You'll notice here that if you go with slightly higher deltas, you actually get increasingly higher percentage returns. As you guys know, if you've traded with me at all, I do not like out of the money calls, except and only if I'm buying the out of the money calls where there's going to be earnings, because you have that increase in IV. So you get that combination of increase in IV and then potential increase in price. So now if you want to do something a little bit more conservative, you could say, okay, well, what if I did a put spread and I sold it? So let's say if I sold put credit spreads, does that work? And that actually works too. Your returns aren't as significant, okay? But you still have stuff there. What about if you sold, it's like, okay, well, what about a strangle? What if I just sold a strangle? Well, that's an absolute horrible strategy to do. It's like the worst thing you'd want to do, okay? Well, what happens if you bought a strangle? Okay, that's pretty good, but not as good as buying a call. What about buying a straddle? That's not okay. But if I buy a call, okay, in this situation, boom. So what happens is you can look at every stock like this and just go through and say, okay, play around with this and say, based on prior events, based on history, what is the best strategy for kind of going into earnings? But then you could also do after earnings, okay, and all that kind of stuff. So what I want to do here, and there's also this scan, this pro scan, where you could say, well, let me just type in Roku and just see what strategies come up here that are awesome. Okay, well, 1 day after an earnings drop, buy a put, okay, or 21 days after earnings, do an iron condor. This is all stuff that you would never, ever, ever, ever know about by just looking at your chart, okay? So this stuff is just, it's pretty amazing. So what I'd like to do here is that I did not create this. I stumbled across it. If you're, I don't even know, remember how I found it. I remember I came across it, was like, this is pretty baller software. I think that was the term I used. and then got to talking to you, learning about your background, and Ophir is kind of like this. Well, I'll let you know, but he smart guy, traded on the floor. I think he went to this school that it's kind of a decent school called Stanford. Figured all this stuff out and just put something together that, from a mathematical probability perspective, is just above and beyond anything that we could ever hope to achieve by looking at charts. So, Ophir, thank you for joining us tonight. I'm going to turn this over to you, and I'm just going to sit back and watch and learn with everybody else.
All right. Thank you so much, John. Can everyone hear me? Just want to make sure. Okay, cool. Thanks, guys. I appreciate it. And I just want to make sure you guys can now see my screen, which is, don't worry about what it is right now. It's got like Amazon, Facebook, Micron. Okay, cool. Okay. First of all, thank you so much, John. You're always so kind when you introduce me, when you introduce the tools. So thank you so much. And hello, everyone. Thanks for joining the webinar. So I want to get into trading, but I want to do a 60-second self-introduction, but I'm not going to do a whole bio because that just kind of gets long. But I think credibility matters in trading. So let me just give you a little bit of who I am. And then if you want to know more, you can email support, whatever. So as John said, I was an option market maker on NYC Arca and SIBO before, during, and after the Great Recession. And if you ever meet me in person, you'll really impress me if you remember this one piece of trivia. My first day on the floor was the day that Bear Stearns went bankrupt. That was my first day on the floor. I didn't even know what was going on. I also was the first person actually to have a peer-reviewed paper accepted and published in an academic journal that showed how machine learning and neural networks can be used to find alpha in the stock market. It's before people knew that neural networks worked. I didn't know they worked either. I stumbled upon it. I was also a hedge fund manager for governance investors using that very model. But my background's in trading and also in financial mathematics and machine learning, where I did my graduate work at Stanford. And finally, for any of you who have patience, I'll be presenting on the main stage in London this year at CFA Institute's annual conference on artificial intelligence and finance. And I will be introducing a new financial derivative to the world of global finance. So the first new derivative probably in about a decade. All right, so that's enough of that. Let's get into trading. I'm gonna start off with a short video, but before I show this video, let's just talk about what we're about to see together, okay? And we can broadly call it short bursts of risk exposure for maximizing profit and minimizing risk, right? So I don't know, whatever visual works in your head, like a swimming pool and you're dipping your toe in, you're jumping in and you're jumping out, whatever it is, that's kind of what option trading is about, right? It's identifying the short bursts that you want exposure to risk, maximize your profit, and get out, right? That's it. We're not swimming 100 laps. We're jumping in and we're jumping out. And that jumping in and jumping out can be 3 weeks. It can be 1 day, but we want to identify when the best times are. So the first thing we'll see in this video is going to be a bullish strategy. And we've shown that it's persisted for the last 12 years, including for the full run of the Great Recession. Actually, John just kind of showed basically a part of it. Okay, it's this pre-earnings momentum. But after about 4 minutes in the video, it's a fair thought that will creep into our minds. So it says like, well, what about when there's another bear market? What about this October through December? Did it work then too? And that's exactly the question we should be asking, right? So in the video, we construct a safety valve using technical analysis that tells us when not to trade, right? So in the video, we will actually witness together how the safety valve avoided all of the Q4 mess. And the best part is you can do all of this with about 4 mouse clicks. But maybe the really best part is that you're now going to have in your back pocket a new strategy with a technical on-off switch that you're going to have for life, right? This is now in your cognition. Now you own this knowledge. The second thing we'll look at is going to be some non-directional option trading. And I actually believe this. If you have the right conditions or the right trigger, I think non-directional option trading can be the most powerful and profitable option trade in your repertoire. Right? And my guess is that by the time you see the second strategy, you might actually be hoping for another massive correction. The third thing we'll look at is we'll use Trade Machine as a stock back tester. So you can actually back test stock technicals, long or short. And then finally, we'll look at a quick ETF strategy just because sometimes I like selling vol in ETFs. And then that's it. When I come back, I'll slow it all down. And I'm just going to make the point again. When you watch this, we want to identify short bursts of risk exposure for maximizing profit and minimizing risk. All right, so let's see the 4 strategies in action, and then I'll be back live. And when I come back live for the first time to any audience, I'm going to show a bearish trigger that I use that has not been included in any video ever. So Darrell, now you could actually show the video. Yep, and I'll be back. I'll be back after. Okay. If it doesn't work, I can do it myself too. All right, looks like maybe there's technical difficulty. Okay.
Hey, Ophir, give me just 1 second. We'll get it playing here. 1 second.
Okay, no problem. Oh, I'm going to mute myself. The anticipation. This is good. I'm eager.
Answers. That's what this is about. If momentum trading actually Answers. That's what this is about. If momentum trading actually works, then there must be verifiable entry and exit rules. There must be a technical indicator safety valve that learns to avoid the trade when the market changes direction, and the results must be empirical and explicit. And that's it. If non-directional option trading works, then again, there must be verifiable entry and exit rules, there must be a technical safety valve which learns to avoid a stagnating market, and the results must be empirical and explicit. The same goes for technical stock trading. There must be verifiable entry and exit rules, and the results must be empirical and explicit. And that's it. Answers. That's what we're about to see, and we're going to do it right now. We'll start with momentum trading. By now, the rest of the world has picked up on our published research that there has been, in the last 10 years during the bull market, pre-earnings optimism, in particular in technology companies. We're talking about this period right before earnings. We're not talking about what happens after earnings. That has turned out to be a bit of a coin flip. But there has tended to be pre-earnings optimism a week or 14 days before earnings, where owning calls and then selling them before the earnings event has been a fantastically good trade. Let's just take a look at how good it has been. We'll look over the last 10 years. We'll look at Microsoft, Google, and Amazon. We'll look at buying a call. We'll do it with custom earnings timing. That is, we will open the position 7 days before earnings, and we'll close it the day of earnings. Since all three of these companies report after the market closes, this trade does not take an earnings bet. If these stocks reported before the market closed, then we would have to put a 1 here. And here are these fantastic results. We can see across the board from Microsoft, Google, and Amazon, just staggering results. 340% to 497%. The win rates are all above 60%. But there's a fair criticism which says, sure, if we could guarantee that we would be in a bull market tomorrow, then we could put this trade on today. But we cannot guarantee if we're in a bull or bear market. And the end of 2018 has been a perfect example of how quickly things can turn. So let's take this exact same test and let's just look at what happened over the last 6 months. And what do you know? All three of these have now turned into losers. Google and Amazon in particular have been monstrous losers on just 2 trades. So does that mean this pre-earnings optimism that we talked about before, does that optimism no longer occur? Or if it does, how do we know when it's going to occur? We're going to apply a technical trigger. And while in technical analysis, you will find thousands of filters, we take a step back at Capital Market Laboratories and looked at the single most used technical trigger, and that is the moving average. We will go down to a technical open rather than normal time. And all we're going to do is enter this trade 7 days before earnings if and only if the stock price is above the 50-day moving average. That's it. You can see all of the other settings we have here. We're not going to get twisted up in trying to combine 19 different measures to figure out a perfect technical strategy. We are going to do the same trade, but only if the stock price is above the 50-day moving average. For those of us that are more visually inclined, this is exactly what we're doing. We're waiting for the 7 days before earnings. That's this green E icon. We're checking to see if the stock price is above the black line. The black line is the 50-day moving average. Since it is, that triggers an entry, and that is the momentum we seek. We fast forward one earnings session, and again, we look at 7 days before earnings, but now the stock price is below the 50-day moving average. It's below that black line, and so no trade is taken. That is our safety valve. And here are the results now. Even over the last 6 months, you'll notice that one of the earnings was skipped. You'll see each of these stocks only have one trade, even though there have been 2 earnings in the last 6 months. And which trade was skipped? We can just click on a backtest tile. We can see the only trade placed, for example, in Microsoft, was in summer. Same thing with Amazon, the one that was in summer. And you'll find the same thing with Google. We applied a simple rule, and now we can compare these last 6 months using the technical indicator without the technical indicator. And here they are side by side. We know there are a lot of numbers. Look at the difference that just eliminating one trade has had. But now, let's look at the impact of this little filter over the last 10 years. That is, what if we used this technical open right here, that is trade the 1 week before earnings, if and only if the stock is above the 50-day moving average, but let's do it for the last 10 years. And here are those results. And since we're dealing with a lot of numbers here we include the results without the technical trigger. To make things easier to read, we'll just show the total return of the back tests and the win rates. First, we found the pattern, and then we found the safety valve. Using the simplest of technical opens, we have seen higher returns using just one of the phenomena that we have identified that exist in the market during both a bull and bear market. Of course, there's no reason to only look at 1 week before earnings. We can also try looking at short-term momentum trades. That is just 3 days before earnings and looking for that pre-earnings momentum. And in this case, we'll look at Tesla and Nvidia. And here are the results over the last year for those two stocks. You see both of them have 4 wins and no losses, totaling over 500% or 200% on just 4 trades each. It turns out that we can also look at the 14 days before earnings for this pre-earnings momentum. So we have 3 days, 7 days, and even 14 days. And how do we find all these ideas? How do we know which stocks are working the best? That goes to the Pro Scanner. We'll click on Pro Scan. We'll select by strategy. We will choose a ticker group of the NASDAQ 100. And you can see there are so many scans that we have for idea generation. But in this case, we're focused on the pre-earnings scans, and we're looking at pre-earnings optimism. So we have the 7 days, 14 days, and 3 days pre-earnings optimism calls. We can even tap on the 3 days and look at those results. You can sort by the number of wins, by the win rate, by the average trade return. You can even sort by the length of the back test. But if we scroll down, we can see even more. Not only do we have the 3-day, 7-day, and 14-day pre-earnings long call, we also have the 3-day, 7-day, and 14-day pre-earnings long call with the technical requirement imposed on it. That is, those trades are back-tested and scanned if and only if the stock price is above the 50-day moving average. So you can see, even for this single type of trade, we have 6 different scans to find the best of breed. While we're here, you notice that we also have pre-earnings volatility plays. That is 4 days, 14 days, and 7 days before earnings, looking to own a straddle just to capture that rise in volatility and then closing it the day before. You can always just tap on a ticker in the scanner and it will bring up the backtest tile and show you those results in the backtest tab where you can customize it further. And finally, no backtest is complete without setting the alert. So I go to the alerts tab. I'll add 2 tickers. I want to look at Nvidia and Workday. It turns out Workday is a great stock with this pattern 3 days before earnings. For the alert type, I'm not going to go days before earnings, but rather I'm going to go days before earnings with technicals. I want the alert to be 3 days before earnings. And the technicals that I want to set, I'm going to click this button, are that the stock price is above the 50-day moving average. Then I add my email address. And I actually like getting text alerts for these things too, so I'll enter my phone number, and then I'll add some notes. And then I'll add the alerts. And I also want to get an alert when it's time to close this trade if I do it. So I'll do the same thing. It's the same 2 tickers. This time I just want a normal days before earnings alert, and I want to know 1 day before earnings. And in the notes, I will put that it's time to close the trade. And then I'll add that alert. And now I've got my alert set up. It will trigger when appropriate, meaning the technical condition has been met and the time to earnings has been met. And I have my alerts to close the trade, so I don't leave it open and take an unintended earnings bet. So we have found the answers that we sought for momentum trading. We found a verifiable entry and exit rule. It was absolutely structured and methodical. We found the technical indicator safety valve that learned to avoid the trade if a bear market or a correction was starting. And finally, the results were empirical and explicit through a bull market and a bear market. And now we'll turn to non-directional option trading. It can be shown that just blindly owning calls and puts, that is straddles or strangles, is simply a losing strategy. I mean, how wonderful would option trading be if you could just buy calls and puts every 2 weeks and make money? But you can't, and we can actually show that. Let's look at the period from 2015, September 30th, through 2018, September 30th, and simply get long a strangle, doing nothing special with earnings, and doing it every 14 days in Amazon, Adobe, and Facebook. And here are the results. Even in a raging bull market, this strategy has been a complete disaster. But here's the secret, and you can only get to it if you do empirical and methodical research. There are specific times when just owning calls and puts together and betting on option volatility is a good trade and avoids all of the risk of a bear market or any directional bias. But it must be extremely selective, and when done properly, the results are staggering. There should be a way for us to make this become a profitable strategy with extremely high win rates without taking stock direction bet. And there is. We just need 4 steps. The first thing we want to do is skip earnings. The next thing we want to do is go to a technical open, and we only want to open this strangle or straddle only at the moment that the stock price crosses down through the 200-day moving average. And when that happens, the stock price is also below the 10-day moving average. We're not going to use a bunch of fancy combinations. We're simply using moving averages. Next, we will come down to our close trade when section. We're going to want to take gains if this strangle ever goes up 20%. Let's close this trade no matter what at a maximum of 10 days after we open it. And here are the results. We've actually added PayPal in there as well. You can see with Amazon, 4 wins and no losses, or PayPal, 8 wins and 2 losses, or Facebook, 4 wins and 1 loss, Adobe, 3 wins and 2 losses. And note, this is taking no stock direction risk at all. It's just waiting for a trigger that indicates volatility so we can look at a non-directional trade. But let's look at how this trade did during the bear market of late 2018. So we'll go into our settings, we'll put in the beginning of October 2018 through the end of 2018. And you can see here in just those 3 months where the market was collapsing, we have 2 trades with Amazon, 2 wins, no losses with 96% return, while the stock was down 26%. Or we can look at PayPal, up 130% on 3 wins and 1 loss, while the stock was down 5%. There was no trade in Facebook because the safety valve, the technical requirement, didn't trigger it. That's exactly what we'd hope to see. Now let's look at the results over 10 years. And while we're here, we added Apple to the fray as well. Now you can see, over 10 years, 12 wins and 1 loss in Amazon, 13 wins and 7 losses in Adobe, 7 wins and 1 loss in Facebook, 8 wins and 2 losses in PayPal, again 8 wins and 2 losses in Apple. Through a bull market and a bear market, taking no stock direction risk at all. We turned a strategy which has been shown to be a loser, that is just owning calls and puts and hoping that stocks will move. We added a few rules with backtesting and structured technical rules to trigger and open, and found magnificent results that work during a bull market and a bear market and when all of it is put together. And where do we find historically the best candidates for this volatility trade with a technical trigger? It's under the Pro Scanner. So we'll click Pro Scan. We go by strategy. We can choose any ticker group we like. In this case, we'll just choose the NASDAQ 100. And here we go for the never trade earnings scans that we have. And we're looking at the technical long strangles. And you'll get all of the results, and you can sort them by the number of wins or the win rate, by the average trade return, the total backtest return, and you can sort by different backtest lengths. And finally, we can go to the Alerts tab and set an alert for the stock price going below the 200-day moving average. Now let's try to use some technical analysis to find a strategy which identifies stocks as they're rising, so it works well in a bull market, but it also has settings such that when a bear market comes, or even when a correction comes, no stock trades happen. That is, the trigger is smart enough to not fire. We'll try this with a special technical open. First, We're going to wait for the stock to cross up through the 10-day moving average. That's a lot of momentum. We also want to make sure that the 50-day moving average is above the 200-day moving average, and the 21-day moving average is above the 50-day moving average. We call this stacked moving averages. Finally, even though this is a bullish momentum setup, we don't want the stock to be overbought, so we're going to say the RSI has to be below 70. And here are the results over the last 10 years. Look at the win rates. 19 wins and 3 losses for Google, 21 wins and 8 losses for Amazon, all the way through to Netflix with 21 wins and 5 losses. But this is during a bull market. So if this strategy is doing what it should be doing, if we look at the bear market at the end of 2018, we should either see winning trades or no trades at all. We'll go to settings and we'll set it up for the end of 2018. Here we go. And now we see that we're getting a message that says the strategy did not result in any trades being placed. If we close that window, we'll see that only one trade was placed with these 4 stocks, Google, Amazon, Nvidia, and Netflix. It was Google. It was a winning trade. It actually went up 48.7%. But more importantly, during this bear market, the technical trigger simply didn't fire. We avoided the bear market. So far, this is working perfectly. Let's extend the time frame and go to 1 year. Now that we step back to 1 year, we see each of them are showing positive returns. But even more importantly, let's see how this technical trigger did relative to just buying and holding the stock. We'll click on a backtest tile. This technical trigger returned 64%, while Google was up 49.5%, meaning it outperformed the stock and traded many fewer days. There's much less risk in this strategy. We can now walk down to Amazon. Amazon was up 23.2% in the last year. This strategy was up 35.7%. And again, much less risk. We can now go to Nvidia. 2018 was a terrible year for Nvidia when it came down to it. The stock was down 33%, but this technical strategy was actually up 16%. So now we've shown that it works during a bull market over 10 years, a bear market over those last 3 months in 2018, and that this strategy can outperform the stock when the market's going up and down. While we're at it, we might as well test this stock strategy as an option strategy. What if we just bought a call during these times as opposed to buying the stock? So we'll get long a call, we'll go down to the close trade when and make sure we close our trade with a 40% limit. And here are the results over the last 10 years. All of a sudden we see returns from 182% to 641%, and look at those win rates. Not a single one is below 60%. And if we go back to the 6-month period from June 2018 to the end of 2018, we see positive returns other than Netflix, and all of the positive returns are larger than the loss at Netflix, meaning this technical setup as an option strategy also works, which is to say it tends to avoid bad trades, that is trades when the market's going down, and jump in on trades when the market's going up. Now it's time for a little bit of a wow factor. For our final and most compelling example of how important it is to understand when you're in a bull market or a bear market by using technicals, that is a structured rule to let you know, we'll look at the famous backtest the Capital Market Laboratories published for the SPY. It's a 4-legged custom strategy, which is created by clicking the custom strategy button. It has 4 legs, and we won't go over it now, but suffice it to say, we have a full dossier which walks this trade step by step so that every single leg makes sense. And this trade does have limited risk. It's totally a covered trade. What we showed was this incredible trade over 10 years that had an 880% return with 113 wins and 11 losses. What could be more fantastic? Well, here's the problem. Over the last year, this trade has started to fall apart. And if we go to the last year, this is for all of 2018, this trade is negative 97%. The problem with this trade is not the construct. The problem with this trade, it was unable to identify when the market had turned bearish. In fact, even if we looked over the last 2 years now, given how bad 2018 was, this trade is still vastly negative, even though it has 22 wins and 3 losses. Here's where the wow factor comes in. We're going to go down to the technical open. We're going to try to set a safety valve again. This time we're going to make sure we only do this trade if the stock price, that is the SPY, is above its 50-day moving average. We also want the 50-day moving average to be above the 200-day moving average. These 2 requirements show us that the SPY is at the very least not in a downtrend. But we also want to make sure that the market isn't overbought, and we're going to do that simply by saying the 10-day moving average is below the 21-day moving average. So you can think of these first 2 requirements telling us we're not in a bear market, and this last requirement making sure we're not overbought. And now, look at the results. We see an enormous loser turning into a winner with an 80% win rate. That's the power of using technical analysis to identify the times when we want to trade and we don't want to trade. We can now look over the last year. All of a sudden we have a trade that has only triggered 3 times, but it's won all 3 times and returned 45%. And here are 2 more cases of proof that it works. If we go to the last 6 months of 2018, we will see a message which tells us the strategy did not result in any trades being placed. Exactly. We wouldn't want to do this trade in a bear market. Now let's look over the last 10 years. Here's a trade over 10 years that has 28 wins and 3 losses for a 363% return. Keep in mind, each of these trades is just 1 month. That's 31 trades yielding 363%. That's 31 months with more than 10% returns. Avoiding a bear market, getting in when it's a bull market, and avoiding an overbought market. We set out to answer 3 questions. We showed one way in which momentum trading works and when it works. We showed one way in which non-directional option trading works and when it works. And finally, we showed when technical stock trading works and how it works. And for each of these, we showed verifiable entry and exit rules. And finally, we had technical indicator safety valves that had us not trading at bad times, but trading at times that were ideal for those strategies. We were empirical and explicit, and we hope that you were better for it. Of course, there are so many other strategies that can be tested, and among those strategies, you'll find your favorites for a diversified option portfolio that works during a bull market, a bear market, and in a chop market. And we cover every stock and every ETF and every index in North America. We were empirical, and we were explicit, and we did answer the questions that we set out to. Thank you for watching. We hope you're the better for it.
All right, that was an awesome video of fear. Everything is all wrapped up and ready to go. So I did kill your screen share before I started the video. So if you'd like, you can go ahead and fire up your screen share again and open your mic. And same for you, JC, if you do want to share screens. But yep, video is all wrapped up. Perfect. Thanks, y'all.
Cool. Cool. So can everyone hear me? And can you see my screen, which is it's going to have 5 tickers on it? Yeah. Thank you, Jamie. Okay. Thank you so much. Okay. So I'm going to just take a step back before we get into one of my favorite sort of realizations what kind of this facility does for us as traders. First, I'll just take a step back. There are 4 tabs. This is a web-based software, just no download or anything. There's the backtest tab, the pro scanner, discover and alerts. So I'm just going to show you kind of one version of flowing through this, and then I'll show you another. So one is I'll go to the pro scanner. I'll go by strategy. I'm interested in the NASDAQ 100. And I really want to find opportunities where there's going to be, it's that strategy number 2, remember, where there's that big vol move. Oh, I'm seeing things that say no sound. Oh, you got it. Okay. Okay. So here's Amazon. Here, I'll take off this button. I just want to look over the last 3 years. And here's our good friend Amazon. Oh, sorry about that. Okay. So here's that trade, which was, just to remind you, the moment, the day the stock crosses down below the 200-day moving average, and the stock is also below the 10-day moving average. Okay, so I found it through the scanner. I loaded it in the backtest tab. I could do other tickers if I wanted to. But now that I found it, look, cool. I just want to know when this happens. So I'll go to the alerts tab, and I'll actually do it, right? I'll say, here's Amazon. I want to set a technical trigger. My trigger is the moment the stock goes below the 200-day moving average and the stock is below the 10-day moving average. I actually like emails and alerts, emails and text messaging, because I'm not always checking my email. So, you know, I'll put in a true phone number, and then I'll add the alert. And that's essentially, oh, sorry, there it is. The alert was created. So that's kind of how you want to use it. Now, let me get to the Discover tab. The Discover tab, there's a lot of stuff in this backtest tab. So the Discover tab is all of the FAQ, and it's answered in video. So anytime you have a question of like, hey, how did you do that one thing? Or how did you set technicals to do that thing? Or well, how did John do that custom earnings thing? Or, you know, how do I change it from 30 days to 7 days? Or how do I close my options before they expire? Or what kind of stops and limits do I have? It's all here in the Discover tab. And we do 3 articles a week on backtests. But now I want to show you my favorite technical, my technical trigger for a bearish strategy. So I'm gonna show you how I constructed it and why I like it. That is how I came up with it, okay? And show you how we can all do it together. So what I'm gonna do is, I have a pretty simple version of what I think of as a technical breakdown. Anytime a stock is below its 200-day moving average, if there's another trigger to the downside, I consider it a technical breakdown. Okay, so my first requirement is actually, all of this stuff is off. My first requirement is, okay, the stock is already below the 200-day moving average. This is for a bearish trade, right? Okay, stock's below the 200-day moving average. Now I want a trigger. And for me, I like the short-term triggers. I want the stock the day the stock crosses below the 10-day moving average, okay? So it's already in virtual technical breakdown. And then I want one more piece of evidence, okay? And then since I'm doing this trade, in this time, you could start seeing stocks oversold. So I want to make sure I'm not getting short a stock that's oversold. So I just make sure the RSI is above 30. It's just a very simple measure for me. I don't really use RSI that much, but at the extremes I do, okay? So again, stocks below the 200-day moving average, it's on the verge of technical breakdown for me. It crosses down through a short-term moving average that day. As long as the RSI is above 30, I want to get short. And here I'm doing it with puts. And this is going to be over the last 5 years. Okay. And I'm not going to go through each of these tabs, but here's Amazon. Okay. Let's just kind of take a step back. Amazon stock is up 324% in the last 5 years. Okay. Now imagine if you could complement that with a strategy that's up 272% when the stock goes down. Right? Think about that. You're long Amazon stock. You want to be long Amazon stock. It's a core holding of your portfolio. Doesn't mean you can't trade the dips. We all know Amazon has huge drawdowns, right? Well, here's a strategy that's won 9 times, lost 5 times, 272% return. And we can look at Facebook, for example. Same thing. Stock's up 169% over the last 5 years. Well, here's a strategy which is up 242% getting short. Imagine that as a complement to your long portfolio. By the way, in Trade Machine, you can always just see every single trade by scrolling down, and you can download it into Excel. So you'll never have to wonder, what was this trade? When did it open? What was the stock price? What was the delta? It's all in here. Okay. But if this thing really works, right? If this thing really works, then it should have told us, it should have signaled to us that something wrong was happening around September, right? That we wish we all could have known going September 15th, September 30th, that the market was going to tank. Right? Maybe we sell our longs, or maybe we put our wish list longs in, maybe we buy puts, who knows, get out of our long calls, whatever it is. There should be like some mechanism. It's not the end all be all, but it's some mechanism that says, hey, something's going wrong. And you want to get a lot of them, right? So for example, if you had these set up, you get a text about Amazon, and the next day Facebook, and then Micron, and then Twitter. And here's how it did over the last 6 months, right? This is the bear market. I want you to imagine how you felt, how that feeling felt in October, November, and December when you saw your longs getting crushed. If you had option positions that were long puts that were doing this, up 300%, up 290% in 6 months, right? And not only that, as these alerts start popping up, you're starting to get the sense something's going on, right? And that's how it will turn. In fact, it's this type of analysis that helps Trade Machine members have such a good October, November, and December. We were actually doing long straddles or strangles. Same thing. It just started. We just getting triggered over and over again. And here's how I do it. Now that you've seen the setup, this is how I do it. I'm going to delete all my alerts. And I'm going to show you how I start to create a portfolio so that Trade Machine works for me. Right? The software is supposed to work for you. You don't work for the software. So, what were those stocks? It was Amazon, Facebook, Nvidia, Twitter, and somebody else bad. Who remembers what the fifth stock was? Micron. All right, and it was a technical alert, and it was very specific, right? I always say, hey, we're in technical breakdown we're on the verge of technical breakdown if the stock's below 200-day moving average. I also want the moment the stock crosses below the 10-day moving average, and I want the RSI to be above 30. And watch this. I'm going to click a button. Let me just add my email address, otherwise the system kind of chokes. So, okay. And watch this. I'm going to click add alert. I have 5 alerts just set right there. So in my real Trade Machine, where I have my actual phone number, my actual email address, I have dozens of these, right? I have short ones. I have long ones. I have pre-earnings momentum ones. I have post-earnings drop ones. I have volatility ones. And so I watch the market, sure, and sometimes I do trades outside of Trade Machine, of course. I get a feel for what's going on and maybe make a trade. But I know that in the background is a machine working for me on trades that I've already verified that they interest me, that I want to know when they come. And when they start triggering, I've now got things to move on. And if they start triggering a lot in a row, so for example, if this trade comes a lot in a row, then I know the market's turning. And you could have done the exact same thing in January had you set your technicals in the other way, when the stocks are starting to cross back above their 200-day moving average, and they stop crossing above their 10-day moving average after that large fall. And you're going to get the same thing in reverse. You start to see the alerts are going to start to trigger you when the market is turning. And by the way, which stocks it's worked the best on. So that's how I use Trade Machine. And if you were to see my actual alerts tab, it's gigantic. And then sometimes I come in and I get out of them. But I like to think of option trading as a portfolio of trades. Like I have all these trades in my pocket, and they're not always ready to go. Almost like you got a pistol, right? You don't want to draw yet. So if you remember when I started talking, I said we wanted short bursts of risk exposure, right? Short bursts of risk exposure, and then to get out. This is what I mean, right? These are my signals. Boom, it's time to take some risk. Okay, get out. Boom, time to take some risk, get out. Sometimes it's short, sometimes it's long, sometimes it's a vol play. And that's how I use Trade Machine. Exactly as you just saw, this is, the short play on Netflix that I just put on, and here's the technical, it's the day it moves below the 200 moving average. And so, yeah, that is the essence of Trade Machine. There's a lot more to it. And when you become a member, you're going to get an email which is going to show you probably the most important 9-minute video, which is actually not about trading at all. It's just a user's manual. It just goes through this thing and says, okay, that stuff you just said that was just too fast, can you just do that slower? That's what it does. That's what it does. It just goes through every little button. How do I set my deltas? How do I set my days to expiration? How do I do stops and limits? How do I set technicals? Oh, cool. John's bull squeeze and bear squeeze is in there. Awesome. I didn't know that. How do I create a custom strategy, right? So, by the way, just so you should know, you can create a custom strategy with up to 4 option legs in stock. So any strategy you have in your mind that you want to test, you can do, okay? So if you want to do calendars, ratio spreads, whatever you want, you can create a custom strategy, and you have an unlimited number of custom strategies. So we don't limit the number of custom strategies. If you want to create 10,000 custom strategies, you're just kind of have a very long drop-down menu. And you can see how many I have, and this isn't even my actual trade machine. This is my test trade machine, how many I have. So that's the purpose of Trade Machine. It's to make you a better trader. Either you discover trades through the scanner, or you have ideas and you test them. You set alerts for yourself, and you start setting yourself enough alerts, you're going to start to have a trading system. When you have a trading system, that's how you succeed, right? There's a lot less luck in option trading than a lot of people realize. And that's what this is. So I'll open up to questions, or if anyone else has anything to say.
Yeah, Ophir, I think what I'll do here is I'm just going to show people real quick that, let's do some Q&A, but I just want to show people how to get this real quick.
Oh, yeah.
And so the idea with this here is if you go over to, let's see, if you guys can see my screen, you'll see a link here, and I'll type it in. It's just simplertrading.com/CML. This is a rate that is for Simpler Trading members only, right? So if you go to their site directly, you'll just pay a little bit of a higher price for Simpler Trading rate for this tool. And that is the link right there. And then what happens is that, and it's one of those things where, again, if you've never seen something like this, I know somebody said, well, can't you do scans in Thinkorswim? You can't. You can do scans for things like, is the 50-period average, crossing the 20, that kind of stuff. But you can't do it for like things like, okay, if I do this, if I buy Delta 40 calls 7 days before earnings and close them out 2 days before earnings, how much money am I going to make? Okay, it's just the stuff you can do on this it's just frankly unique. And before I saw this, a lot of the things that we did were pure guesses. After we do it, we can actually apply math, logic, and back-tested results to options trades, which is pretty much impossible to do on any platform. You can set alerts if something happens and things like that too, but you can't dive in and see all this kind of data. So this is something where on the site, it's a $149 a month program. Through this, you can get it for $89 a month. And if there's anything on the planet that is going to give you a positive ROI for the rest of your life, if you're serious about options, I mean, if you're not serious about options, this isn't for you. But in terms of, this is it. So, I mean, it's kind of like a no-brainer kind of a thing there. So they also have a great support team too. And just on this page, if you go to simplertrading.com/CML, there is a video there, different things like that. So you can certainly kind of see that. But the main thing is you can sign up for the discounted rate and lock that in, right? Way cheaper than the $149 a month. And the main thing with this is that what we've seen with this is over the years, or I guess I'd say over the years, but maybe over the last 2 years, as Ophir adds more tools, the price goes up. But whatever price you lock in at, you're good to go. All right. So as the price continues to rise over the years, you can lock it in now. So again, when I look at tools like this, I just kind of look at it as very simple. Is this a tool that is going to pay for itself? You've heard the adage, if you can borrow money and make money, go ahead. It's the same thing here. If there's something that is an expense that you can get a positive ROI on, okay, it's a no-brainer. So again, I usually with something like this, like I don't have to explain it. Like if you're looking at this and you get it, you get it. And if you don't get it, that's fine. You don't get it. This is just one of those tools that when you put this tool in your toolbox and you start to play around with it and you put the work in and you learn it, it just changes your trading, and which is pretty awesome. So Ophir, that's kind of the thoughts that I had on it. I mean, I'm happy to show people stuff, but again, it's one of those things where you guys will see us using this in the room. I always like to kind of get caught up, and we haven't done one of these for a while with Ophir, and so I would mention to him like, hey, it's earnings season. We're going to start showing this in the room, but we've got a lot of new people on the site that when we start showing this, they're going to have no clue what we're talking about. So can we at least do a webinar, at least let them see what it is so they understand it. And then if they want to sign up for it, great. And then, so that's what I got there. And it's pretty great. And by the way, Ophir, I love that thing that you guys added in the Pro Scan with the 3-day. That's a new one. I actually wasn't familiar with that. It's funny. I've been so used to using this the old way, the way that I learned how to use it originally. It's kind of like, oh, there's some new tools, but I really like the ones that I use, and I was kind of blown away. I'm super excited.
Oh yeah, thank you. Yeah, it's actually a really good point you brought up. We continue to build Trade Machine. So at some point in the future, Trade Machine is going to be $500 a month. Okay? I'm telling you right now, it's going to be $6,000 a year, for sure. Everyone who signed up for Trade Machine never sees a price increase unless you leave. So there are people paying $49. There are people paying $149. The price is going to keep going up because the price of our technology starts going up, right? So think about the computational power it takes to do all of this with technicals and custom earnings on a custom strategy with data back to 2007, right? We're talking, on the realm of, let's say, 100 million calculations a second, right? And then we're going to add more technicals, right? And we're going to add IV filtering. So the tool will keep getting better, and the tool gets better based on user feedback. We actually send out polls, and we just let membership vote. I mean, whichever vote wins, we go ahead and build that. So everybody, it was pretty unanimous with the last poll. Was, do you guys want technicals? And if so, which ones? And we're going to add more technicals. Which ones do you want first? This was it. It wasn't unanimity, but it was a great majority said we want technicals, we want moving averages, and we want at least an RSI, if nothing else. I said, okay, that's what we're going to build. So it's going to keep getting better. I saw some questions which I can answer, which is now they're coming really fast. Sorry, I thought I saw a question. Now they're coming in quickly. Hold on one sec. Let me try and find the question.
I see someone, Henry just signed up and said, like, is there any training or anything? And yeah, so if you go to the tab, the most important thing you can do, and it's the video that Ophir talked about, is go to Discover, and then you'll see right here, the first thing you need to do is just watch the user's guide to the Trade Machine, and that's on the Discover tab. So before you start playing around with it, this will save you a lot of angst and suffering right there. And then from there, I just start off on the back test, start playing around with that, and then dive into the Pro Scan. And but yeah, just the Discover tab, that's where you're going to get all your info, and it'll get you up to speed really quick.
Exactly. Also, when you sign up, you'll get like a welcome email, and that email will say, hey, here's the link to the user's manual. Here's the link. We have, in the Discover tab. John, can I take the screen back? Is that all right with you?
Oh yeah, for sure. Go for it.
Okay, sorry. Okay. Yeah. So you guys can see my screen, right? Yeah. Okay. There's a lot of stuff. If you really want to become like, there are different types of option trading, right? One of my favorite sayings is that if you're option trading, then you're volatility trading, whether you mean to or not. So if you want to really become an expert on volatility, you don't have to be. It's not something that is imposed upon you. If you've got that kind of desire, we have a video here. It's actually 37 minutes. And by the time you're done with this 37-minute video, I am willing to bet that you will know more about volatility, how it works, how it decays, when it decays, what gamma means. You will know more about it in 37 minutes than I would guess at least 90% of professional option market makers. Forget the retail. I'm talking market makers. You'll know more than at least half of Goldman's options team. I know they follow me. They ask me questions, right? This is it. And I put it together in a 37 minutes. So the Discover tab has a lot of great stuff. But if you really just want to dive in and start using it, which is actually what I would do because I'm not a real patient guy, watch the user's manual, start backtesting, or go to this pro scan, look by strategy, whatever you want. What John was saying is that we added this 3-day pre-earnings on call. So for those of you that are kind of more in tune with the shorter term trades, we have 3 days pre-earnings, especially with technicals. So this is also one of my favorites. So actually Netflix just passed. So this isn't the trade into earnings, but it's the trade before earnings, right? So Netflix usually has a run up. Don't hold it through earnings. That's a whole different trade. If you want to see if it works during trading, I'm just curious. I'll just do only trade earnings. It's probably going to be a disaster. Oh, coin flip. Yeah, wouldn't do it. Don't trade earnings. So yeah, so there's a lot of let's say help for you in the Discover tab, and we have our support team. So feel free to email us, and we do send 3 emails a week. And for example, just today, I sent out a pre-earnings alert on Ferrari. So 7 days before earnings, make sure the stock's above the 50-day moving average. This is what it looks like, right? And here's the stock, here's the 50-day moving average. That means it's a trigger. And what's happened over the last 3 years, this, right? And then you can just tap on it and you'll see the backtest load. Well, you should have seen the backtest load in the backtester. So there's a wealth of information available at your hands, not to mention our support team. So yeah, it's up to you guys what we do now. I can show you some more stuff, or I can just answer questions on the fly. Does it work well with a small account? Yes. So this works well with any size account, as long as you're, make sure that it's appropriate that you're trading options. But doing 1 lots and 2 lots is the same as doing 100 lots and 200 lots. You just, make sure your ticket fee isn't too high. But there's no difference. In fact, I think I have my settings set at 5. Just you can set it at 1. You can also, by the way, set your custom commissions here. A lot of things here that you'll see when you get to the user's manual that show you how to set the right sizes, how to set exactly your settings at your broker. Yeah, so yeah, small trades, exactly. Okay, sorry, just trying to get the questions are coming in quickly. Okay, how do you set up for stop loss? So here, yeah, absolutely. You set your stops and limits right here. So this trade has a 40% stop and a 40% limit. And you can test, it's another great idea. You can test which stops and limits are most appropriate, right? Like how did this, okay, here's as this trade looks right now. What if I took out the stops, right? Okay, it didn't affect it that much, but if I take out the limits, I'll bet you it will. Goes from 6 wins and 2 losses. Whoa. Okay, well, here's one where you would just let it fly. Right? I don't know if you guys saw what happened. This is a 656% return over the last 3 years with no stops or limits. But when I've put a 40% limit in there, I was selling too early. So there you go. So that's how you set your stops and limits. Sorry. You can sign up monthly. Actually, that's what it is. Can we add our own stock watch list like the IB50? Yes. So if you want to scan like a list, you go to Pro Scanner. You go by ticker. If you have Chrome, you can actually just drag this down. You don't have to drag it down. Just add a comma delimited list. So up to 100 stocks. So you can add. You guys are going to hear my keyboard. My keyboard's pretty loud. I'm sorry. So let's just start naming stocks. I don't know. Tesla, Facebook, Twitter, Goldman Sachs, Boeing, it doesn't matter. So I enter my list of stocks. Now I'm doing scans just on this list, right? And it's all of them. It's all kinds of scans. So just as an example, let me just pull out, there's one picture that I really like here. Let's see if it shows up on my screen. Yeah, you guys are seeing that, right? So one of the great questions, I've always had this question. I actually learned how to do this by watching John. He doesn't know that. When there's a big earnings beat, like how do you did this with NVIDIA like a year ago, and I was like, oh, that's a great idea. So when there's a big earnings beat, right here, so you don't own the stock right now, right? You just noticed, man, this thing is ripping. Like, how do you know when this is going to happen? How do you know it's going to keep going up, or when is it just going to kind of trail off or hit a wall or whatever? And it turns out we actually have a back test for that. And by the way, while we're at it, I never want to give the impression that you should be long or short. With this, oh, same picture. Sorry, guys, I've many monitors. Oh, there we go. It's the same thing here, right? I don't want to impose bullishness or bearish. Like, what happens when a stock misses? Like, how do you know this is going to happen? Because sometimes it doesn't, right? It doesn't. And so we actually have a scan for that, right? You can actually go by strategy, do the NASDAQ 100. I just choose NASDAQ 100 because I'm a tech head. It doesn't, you can choose any stock you want, right? This is called the post-earnings one day after earnings jump long call. So this means stocks rip, do they continue to rip, right? And Apple, which may not see an earnings beat for a long time, let's do Baidu. It turns out Baidu has this awesome pattern, right? When Baidu beats, there we go. When Baidu beats, it continues to go up. So what am I looking at? I go to custom earnings. I'm looking at a trade that happens one day after earnings, that closes 14 after earnings, but if and only if the stock was up 3%, I could put whatever number I want here, was up 3% or more the day before. So I only want this to happen when the stock's up a lot off of earnings, right? And then you get this result. It turns out Baidu continues to roll forward, right? There are other stocks that don't. So you can test that in this scan, right? It turns out Apple does that too. It's just that who knows the next time Apple's going to beat earnings. And you can do the same thing on the other side. So if you've ever kind of watched a stock beat earnings or watch a stock miss big on earnings, you just kind of look at it. You're like, I feel like there's a trade here. I just don't know what to, like. Is it going to keep going down, or is it going to stabilize? You can check that in the back tester, right? That's why the user's manual is so important, right? That's what this little button does. It's actually not in beta. I don't know. This is because I'm on my development box. So you can only do these trades, let's say, if and only if the stock does a certain thing off of earnings. So you will really develop a portfolio of trades for yourself. Like when the market's getting bullish, when the market's getting bearish, when a single stock crushes it, when a single stock misses huge, when there's volatility, when there isn't volatility. When you start building up your strategies and building up your alerts, you're going to have a portfolio of option trades to turn to. And that's really the best way to trade it. Then you're never really stuck in one position. You'll have like long 17 different companies, long calls on 17 different companies. You've got different things and sometimes you want to be company specific, right? So maybe you're long most things, but this happens, right? Like, let's say, I don't know, Netflix, for example, but maybe Netflix isn't a good one to continue the downward momentum. I actually haven't looked. So these are the things that are available to you, and you'll know all of them if you just take the time to watch the user's manual. And we actually have a video on the scanner as well. Scanner's big enough that you would want to use that as well. So really long answer to yes, you can just look at tickers that interest you by doing this. One thing I will tell you before you get frustrated, you can't save the ticker group. So you can put 100 tickers in there, look for them, but when you come back, it won't be there. We need to add a save button for that. So that's our bad. So save it in Excel so you can come back and copy and paste. Don't type 100 tickers. It's just going to take too long. All right. I think these questions are for simpler.
Yeah, I see a couple of questions like if we use it in the room, and we do, and there's times when we have discussions about it. We actually used to have a discussion forum about it, and then we moved when we moved sites. So that may be something we look at too. But it's something that what you'll find is there's actually people in the room that actually like to use it, and as we we can bring up and do discussions about it too. There's just a lot of cool stuff you can do. I actually have not used the alerts feature, and I was like, okay, that's pretty cool. Mostly I use it for trying to figure out, if there's a stock 7 days to 14 days prior to earnings is kind of the main thing I would use it for. I've been using it for. And then seeing like, and I would try all these things like long call, long straddle, but it always turned out to be, long call. But I would eyeball the stock and say if it was an uptrend. What's cool though now is we can add that little technical feature and say, okay, is this, is it above the 50-day moving average? Or, just kind of a little tweak like that, that actually, that makes that easier. And so there's a couple things like that I've already been jotting down ideas as I've been listening to Ophir, just about some alerts and some things like that I want to run. So the one thing about, some of the stuff, if you, say, oh, I want to find all stocks that meet this criteria, well, you're going to get a lot of, illiquid stocks. You're going to get some, stuff that you just don't want to trade. But man, anytime Amazon hits that specific thing, I want to know about it. So that's a real key point there too. So I thought that was pretty awesome.
Yeah, exactly. That's why I tend to scan on the NASDAQ 100. It's really liquidity. You can do the S&P 500, Dow 32, but John brings up a good point, right? Make sure it's incumbent upon all of us to make sure that the markets we're trading against are, it's possible for us to profit. We don't send your profits off to the market. That's not the goal. So, and by the way, there is a way, I won't go into it, but there's actually a way to test liquidity in stocks through the trade machine by changing your execution fill type. So we actually allow you to test it. And by the way, if the options look really bad, you'll actually, I might find one. Let's see, what is a really illiquid? Oh, I know. Starbucks 10 years ago was not liquid. So I don't care if this trade works. I just want to show you how, maybe 10 years. I think we'll get a warning. No, of course not, because it was liquid. You will actually get a warning down here in orange now. It says, hey, this is like no bid at $1.50, and like, yeah, I don't think you want to trade this. So you'll also get warnings. But yeah, stick with the liquid names, and you should do well. You should be able to at least apply the model, the back test, in a reasonable way, as opposed to just giving your money to the market makers. Don't do that. Is there a vertical spread? Oh, go ahead. Sorry, John.
Oh, I was just gonna say, we always have a joke that never.
Oh, John's sound died. Okay. It says, is there a scan for vertical spreads? Yeah, absolutely. Right. Oh, a scan. Let's see. We have scans for the bull squeeze, a bull squeeze call spread. That's a vertical spread. We have a scan for a short put spread. But remember that if it's not in the scanner, you can still back test it, right? So you can put up to 5 tickers at a time here. So it just is a little usage. If I don't put a comma after my, oh, boom, there you go. That's what I want to show you. If you don't put a comma after your ticker, it's just going to show you all the deltas, and you can decide which deltas it shows you down here. Like, okay, great. But if you do, by the way, I want you to, it says the 30 delta calls. So the 30 delta calls, this one, it's saying, yeah, I would watch out. It was a quarter bid at 390 with a daily volume of 0, which means don't use the 30 delta calls. Okay, so we do try to warn you. If you want to add more than one stock, that's when you put a comma. You'll only see the middle delta right here, this blue one, right? And now you can put as many stocks as you like, right? So you can add, Amazon, Nvidia, Apple, if it ever goes up again, Google. So that's how you test several stocks at once. I don't even actually know what I'm testing, but another thing you can do, if you like a back test a lot, let's say you like this, I don't know, let's say you like this Ferrari one a lot. That's a link to the back test. It's unique. It's the only link in the world that goes for you, that goes to that back test. If you want to set an alert and say, hey, I really want to see this Ferrari one 7 days before earnings, or I have to put an email address, or it just says wrong email address, and now my caps lock is on. But in my notes, I actually put the URL. So now when I get the alert, and I'm going to get this address. So it's going to say, hey, it's 7 days before earnings in Ferrari. And I'm going to say, sweet, why does that matter? I copy and paste this, and all of a sudden I get my trade, right? So you can always take the links to your back test. And so that's my alerts tab. It's several pages, but it's full of these types of things and my notes are usually back test links. So I know what I'm doing, like, because I set a lot of alerts. Sometimes I don't know what I saw 3 weeks ago, or 3 months ago, or 6 months ago. And so these are all these things that you're going to figure out if you watch the user's manual. Also, just so you guys know, when you sign up for Trade Machine, if you don't like it in the first 30 days for whatever reason, I mean, I think it's hard not to make $89 using it, but if you don't like it in the first 30 days, we give a refund for the first 30 days. So you just say, hey, it's been 27 days and I don't know, just I didn't get to it, whatever. We give you a refund for the first month. It's fine. We're not trying to trick you into buying software. It's this should only have membership if people are profiting. That's it. And we do have membership and they are profiting. So it's virtually a risk-free trial unless you can't remember to email us. And if you email us after 32 days, it's fine. We give you a refund too. So we're not that finicky. We want you to be a happy member for years, not for a month. So probably a good thing to know. And I will do, I think John had the URL. I think it's, because we have one too. It was simplertrading.com/CML. I think that's right. Yeah, okay. That's the URL. I'll put it on a Word doc. Oh, okay.
Yeah, if you guys just type in simplertrading.com/CML, it'll take you to that page. And then, yeah, I just, like I said, even if it's one of those things you're not really sure about it, it's worth playing around with it. I mean, it's just one of those things where it's a lot different when you take a trade like this and you have the confidence of 1 year, 2 year, 3 years of option back test, right? Not the stock back test. And of course you can do stock too, but it's just like, wow, 7 days before earnings, if I buy a Delta 40 call on, XYZ, this is the reasonable probability I have of success. And it's, again, it's just something that it is not data that you're gonna be able to find anywhere else for that kind of stuff. And just the whole idea of the one where, if it drops after earnings, Ophir, one thing I was always wondering too, is if at some point, you brought up that NVIDIA example after that big move is, yeah, I guess that would actually fall into the 3% move, because you could say, okay, if it has say a 2 times expected move, it might be difficult probably for the software to pull, what the pre-programmed expected move or market maker move is, but usually that's going to be 3%. So I guess that's a way to kind of get around that, but that would actually be an interesting scan too.
Yeah, right. If it historically has moved more than what the at the money straddle was expecting. Yeah, that's a good idea, right? And if it has, so it's not defining it, you're letting the backtester check every earnings session and check it. Yeah, that's why that we need great ideas for scans. So that's a great idea. Exactly.
That'd be kind of fun, yeah.
Yeah. So I got 2 questions. One is, someone said no contract. That's right, no contract. It's month to month. The next question someone asked is, can you screen for win rates greater than 90%? Yes, you can sort by win rate on the scanner. And then another question, someone said, how do you do long call butterflies on the custom strategy? And since it's in all caps, I feel compelled to show you how to do it. So I'm going to create a call butterfly for you. Okay, so here it is. You go to custom strategy. You go to add. You call it something better than my strategy 42. So I'll call it, let's call butterfly, right? I'll do call butterfly. Okay, great. I don't want any stock in a strategy. I want to be short the middle leg, the 50 deltas, twice. Right. And I want to be long the wings once. I'm just making up deltas. You can do as you wish, right? So there's a call butterfly, and I would actually, since it's for me, I would do a 30, 50. I'm typing over my microphone, so I'm looking a little foolish here. Call butterfly. So there, now I've got a call butterfly, and I can back test it on whichever companies. Over the last few years, this has not been good in these 5 companies. So you can find which companies butterflies are. So someone asked many times, can you add % short position as a criteria? So you can definitely have short stock as a position in a multi-leg option strategy, if that's what you're asking. Sorry, can you repeat about the trial? So there is no trial. It's just that when you sign up, if you don't, for whatever reason, you can't make $89 trading in the first month and you feel like you never will, you just tell us, hey, I kind of didn't like it. Can I have my refund? And we'll just send you a refund. And so it didn't cost you anything. Can you screen for percent? Yes. Okay. So someone asked that. Okay, so let's say you're really interested in a particular strategy. Let's say NASDAQ 100. John and I have been hitting on this. Actually, that's S&P 500. I've been hitting on this pre-earnings momentum. This is one with a technical safety valve, right? Make sure the stock's above the 50 moving average. But yeah, but I want to look at ones that have worked for a long time, at least 2 years, and have a win rate that's high. So you can sort by win rate. Here are all the companies with the high win rates, right? Boom, 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 right? So Microsoft, which has earnings, yeah, so I think I might be in this trade, has 8 wins and 1 loss, for example. So you can scan on, you can sort by win rate. You can also sort by number of wins. I'm going to throw something out there. You can also scan on the average trade return, and that might be more important. I don't know. Like I love high winning rates, but as long as the winning rates, it looks like there's edge, I like a higher average trade return, right? So just something to think about. But that's great. You have to take your own personality into your trading. Does it help you with setting the options chain if you want to use straddle strangle spreads? Yes. So if you want, let's say you're just, what you want to do. Okay. You want to get here. Let's do Amazon. You want to get long a strangle on Amazon or a straddle on Amazon when if the stock gets crazy again, crazy in a bad way, like we just had, right? So that's how this trade looks. And this is I think I had to stop in one. I should probably just go from the scanner. Let's see if I can figure it out myself, guys. Close enough. Okay. So you say, well, how do I know? Like this is. Oh, sorry. I want to strangle. Right there we go. Oh, that was really interesting. It's also a bullish play, a bearish play, which makes sense. Interesting. You guys see that? If I get long a strangle, I have a higher win rate, 333% return. But if I just get long puts when this happens, the win rate's lower, but the return's higher. Interesting. Okay. Sorry, let me answer the question. So you said, well, which deltas do I use, right? Like 40 delta, 50 delta. So that's when you go here. And let's say we'll do 50-50 would be we call this straddle. 40-40. So I just keep going further and further out of the money. Never type over a microphone. That's a new rule for webinars. Okay. Oh my God. Okay. Okay. Now I'm going to take out the comma and I'm going to see that back test on every single combination that I wanted. Right. So this would be buying a straddle. This is getting long and out of the money strangle. This is a little further out of the money, a little further out of the money. You can see the 20 delta looks like a 20 delta. That's where the sweet spot is, right? So you can always test that. And you can test that with long calls and long puts and butterflies and spreads, whatever you want. You can try to identify what part of the option chain is has generally been the sweet spot. Oh, by the way, guys, you can also check things during the Great Recession by just clicking 2007 to 2009. So if you're wondering if this strategy worked when the market was totally melting down, yes, it did. Okay. Scroll down, scroll down. In the meantime, I'll do this here. I'll keep reading questions. Don't worry, guys. I'll get there. Oh, yeah, there's my Twitter. Oh, so support email. So if you sign up for is there a possibility of getting data testing before 2007? Yeah, we could actually add data before 2007. Sure. We'll let members vote on it. There's a question how to get to support. So when you become a member, you get our support email address, and then that's where a lot of questions are answered. Sometimes we just point you back to FAQ, or sometimes, depending who you get on support, you're going to get a really long email. You'll start to know the personalities of our support people. Some of them are really pithy, and some of them give really long answers. You'll see. They're always good answers. It's just different personalities. Does the above 50-day moving average trigger still work if the stock is still below its 200-day moving average? This is common on many charts today. Bruce, that's what the back tester's for. I would say test it, put it in. It's clicking a couple buttons and trying it. Under the next earnings columns, what does not verified mean? Okay, yes. So we already know Amazon has earnings. Who do we? NVIDIA. Yeah, we don't know yet when NVIDIA's earnings are. So our earnings date provider is the beast. They're the one that Goldie has, all the hedge funds have, this is what they do. They're called Wall Street Horizon. Nobody knows of them except if you're an institution. So we buy their earnings data. If they're wrong on an earnings date, they actually pay us. But I know that sounds insane. A data vendor paying you, they pay us $100 for every time they're wrong on an earnings. We've had them now for 3 years. They've never paid us once, covering 7,000 stocks. So not verified means this is not a verified date. There's no way to verify that NVIDIA's earnings are now. This is just an estimate based on last year. When this not verified goes away, it means we have a hard date. It's been announced. Normally, it means it's on the company's investor relations website. So this is what it looks like when it's not verified. Amazon, on the other hand, is verified, and so you won't see that red warning. Okay, so you'll always know that. Can you custom test calendars? Yes, you can custom test calendars. You go to the custom strategy builder, say add, call it something better than my strategy 42. You should say, this is one of my, I actually like this trade. I like getting long 50 delta calls and then selling an out of the money call every week against it, right? Just keep rolling it, but make sure you have this unchecked. This is close all legs with front month options. So if this is checked, this means I'm going to close this trade after 7 days. But if I uncheck it, it means it's going to continue to roll. So I have this option that I'm holding in my hand, and I want to keep selling it premium against it. So I'll call it call alley 5020, and I'll save it. Yeah, so here it is with Amazon. Look at that. A call calendar with Amazon during the Great Recession still returned 60%. That's pretty remarkable. So yeah, here's a call calendar, you know, and then you want to check your deltas. Which ones? I don't know if I have any. Oh, I'm doing this too. Sorry. Let it rip. Yeah, so this is what a call. So you can test any strategy you can imagine, and the only time up to 4 legs in stock. So if it's more than 4 legs in stocks or more than 5 legs, okay, that's you've hit our limit. The liquidity warning comes from, which stock was that? Do you guys remember which stock I got the liquidity warning? I don't remember. Anyway, it's going to say in big red letters, you know, don't trade this. Race, thank you. It was in Ferrari, right? The 30 deltas in Ferrari, thank you. Strangle. 10 years. Oh, maybe it was the 20 deltas. I'll let it credit. Oh, that's a huge backtest. There we go. It'll show up. There we go. So it'll tell you, you know, hey, the calls used have low liquidity, unreliable prices. For example, here's an example of the prices. So we try to let you know. I mean, the goal is to find good backtests that is backtests that you can actually do, not backtests that just look good on paper, right? It doesn't help anyone. You can use SPY and QQQ. Okay, so we cover every ETF and every index in North America. So QQQ, SPY, IBB, XLF, you know, whatever you like. Let's see. It shows amount risk versus return based on what number of contracts. Okay, so these statistics are based on the number of contracts you set right here. So I've set 5. You can set 1. You can set 2. Also, remember, you can always. This is really important. I would say most people miss this when they come to the trade machine. Once you find the backtest you like, okay, you like the results. Doesn't matter how you found it. Doesn't matter. You like it. Remember, you can tap on a backtest top. So I'm just going to click my mouse button. Okay, and this shows you all of it. Right? It was 5 contracts. Here's how the stock did. Here's how the average trade. Here's how the trade did. Here's every single trade, right, in the backtest, and you can download it into Excel, right? So none of this is just kind of trust the machine. Quite the opposite. It's more like trust the human, let the machine work for the human, okay? So you set the number of contracts you want in the settings window right here, and you also set your commission schedule appropriate to you. What are your commissions here? You can also set custom dates. You don't just have to use 6 month, 1 year, 2 year, 3 year. You can set exactly what you want. You can look exactly at December of 2018, for example. Is there a possibility to expand into Australian option data or European markets? We actually could expand into European markets. Our data vendor it's Option Metrics. They're kind of the 800-pound gorilla. We just haven't seen enough interest for them. But we could actually just flip a switch and turn it on. It would just cost us more money. We do not cover futures. I think that's everything. So I'm going to put this back up. This is normally $149. It's $89 for simpler trading members. Your price is locked in for life. Unless you cancel, then it's free because you don't have it. The price is going to go up. I'm only going to leave that up for a little while. The price is going to go up anyway as we start adding features. I mean, for example, if we were to add European markets, it's not going to be $89 for everyone else, right? Maybe it'll be $189. I don't know. So that's pretty much it. Unless, is Ophir part of the simpler trading team? No, I'm just very fortunate to have met John a long time ago when I was at LiveVol, back in the early days. Couldn't we let you do all the backtesting by just going through all the trade steps? Forgive even programs. Couldn't we let you do all our backtesting by just going through all the trade setups we get via email and program those into Trade Machine and not worry with all the backtesting? I.e. when you get an alert, I'm not sure what that meant. Sorry. Are alerts okay to overseas mobile numbers? Oh man, Kevin, that's a good question. I think if you put the country code in, you will get your alerts to Australia. I think that's right. But you have to put the country code in.
And one workaround on that too might be you put it in a Google number. I think we've had a couple of people do that, but it should actually work with overseas too.
Okay, yeah. I actually don't. That's actually a really good question. I know we have like this group of traders in Germany, and I think they get their alerts, but I don't know if they just did what John said. I don't know if they set up a hack on their phone, like they got a US number. I feel like it should work. We use Twilio, and Twilio's obviously international, so it should work. As I say hesitantly. How much to sell us?
That's funny. Well, one question I see too is a couple of people are asking like, hey, is this something we're going to be discussing in our trading room? And the answer is yes. I mean, I think what you'll see is during earnings season, we start using this more. So what I'll do is tomorrow, Friday, my session in the room is during the close from 2 to 3. So I'm going to run through some scans for earnings for next week and the week after, and we'll start setting up trades on it so you can kind of see how it works. And then I'm also, again, I've just been kind of a little lax in getting up to speed and all the new features. I've just been kind of using it for earnings, but I'm actually really intrigued by some of the stuff, Ophir, that you showed there too on the technical setups and setting up alerts. So that's gonna be pretty awesome. Especially on like some of the crazy cannabis stocks and things like that, the ones that are, you just want to know when there's that specific moment in time when I think you use the term pull out your pistol, but that's just it. It's like, okay, if CGC gets to this situation, I want to know about it, but I can't stare at it every day. So stuff like that, I'm really intrigued by too. So that'll be fun.
Yeah, I feel like I've now removed my need to stare at the screen as much as I used to stare at it. Now I'm looking for good trades, and I know I have in my back pocket. When it's time, I've set it up. It's time. It'll let me know. I'll get a text. So.
I always wish there was a service that every time like my wife got a haircut, they would text me and let me know so that when she came home, I'd be prepared to say, oh, you look great. So this is kind of like that, but for trades.
We'll add that alert.
Thanks.
Yeah. How do I set an alert to notify me of technical price times 200 moving average? What? So all of the technical alerts are the same as the back tests. Let me just open that window. So this is what we have right now. As you can imagine, guys, we just, oh yeah, by the way, if you want to backtest stock, you can click stock. We just started touching technicals, obviously. This isn't comprehensive. I did some testing myself and found that whether it was comprehensive or not, it was really sufficient to help me find the market turn both ways. And so these are the ones I wanted in. This will grow. I mean, this could be a separate application, right? I don't know what the future of Trade Machine will hold. I do know that whatever price you have, it'll never change, but you might have a software that's 35 times bigger, right? It might be futures, commodities. It might have, this technical thing might be so big, it might open in a new platform, a technical platform, and maybe you'll have, I don't know, 2,000 technicals to choose from. I don't really know where it's gonna go because our membership helps us, right? They tell us. Then we test things to make sure it's worthwhile. And then if it's good, we put it in. So the only thing I can definitely 100% guarantee for you, there's going to be more. I said that the first time I was on with John like 2 years ago, and I don't even think we had a scanner back then. Never mind all this other stuff. There's definitely no technicals. And it's just going to keep growing. There were definitely no alerts, right? So it's just going to keep growing, guys. It's just going to keep growing. We have the urgency of a trader behind it. That's me, right? Everything about trading is urgent to me, right? Like I want this, I want this, I want this. So, but I empirically test it first. So it's going to get bigger. It's going to get bigger. But actually, I think one of the nice things about Trade Machine 2 is that actually very much as John was saying, like, okay, so John hadn't checked the most recent updates. He was still getting everything he needed out of the software, right? Like, doesn't mean you can't get more, but once you find your trades, you find your trades. Like that's you guys know that. Like I found this trade that loses every time in Ferrari. Interesting. Okay.
That's actually really hard to do. That's an interesting. You just take the opposite side of that trade.
That's true. Let's short it. Okay, there you go. I won every time. How big is our community? Let's just say it's thousands, but we don't say how big our community is because of competitors, unfortunately. Yeah. So if I'd show you guys something funny. Should I? I'll regret it if I do. Never mind. If you Google us, you'll see what I mean by competitors. People buy our name for Google ads. Can you show us potentially winning Amazon trade for earnings since it's 7 days away? I can try, but you can also try. I don't know. Does Amazon have momentum? Yeah, custom earnings. Got it. When are Amazon earnings? Also, is the day before earnings good? Oh, yeah. All right. Okay, let me set my stops and limits. Yeah. Amazon trade a lot. So Amazon's after the market closes. So you can, with Amazon or Microsoft or Apple, whatever, you can put 0 days before earnings and you're still going to get out before the event because they report after the market closes. If a company reports before the market closes, you got to close 1 day before. I wonder if Amazon has this 3-day momentum on a 7-day. Yeah. I'm not seeing it. I don't think I've ever traded Amazon. Oh, well, that's pretty good. I love that. I have this technical open, which is the stock has to be above the 50-day moving average. And I love it when I do a 6-month back test and I see this. It's basically saying there are no trades here. That's exactly what you want to see. This is a bullish trade. And if the back tester is triggering, it didn't do its job. The back tester should have said, don't trade this right now. And that's exactly what happened over the last year it's winning. So yeah. Oh, I'm also doing, let's see if I can do all the deltas. See if we can't come up with something. Yeah, so as I'm using the back tester is how I think you should use it, right? So it looks like 30 delta is a sweet spot. I've seen better trades than this. But yeah, there does seem to be some momentum in Amazon ahead of earnings, which isn't surprising. It's stronger over the last 3 years. See how it does over the it's really strong over the last 5 years, right? So something has changed from 5 years ago to 3 years ago, and what that is the last year. So, but these are great trades. Make sure you honor your stops and limits, things like that. All right. So guys, I think I've gotten what button do you click to get the trades URL? Okay, that's a great question. So this little piece of paper, I don't know what this icon is called. That gets it for you. Okay. You can also tweet it, but that would also get you the URL, right? But it's annoying because it's in a tweet button. So this just gets you the URL itself. And you can see, by the way, on the Discover tab, by the way, you can see we have some things shared. So I did a bearish tilted SPY trade, and it was shared 1.45 million times on social media. I did an NVIDIA trade during a quiet period. So like 30 days away from earnings. So 30 days after earnings, 60 days before earnings, it was shared on social media 239,000 times. Right. The only thing is for all these trades, everyone who shared it couldn't see it because you can only see custom strategies if you're a Trade Machine member. So yeah, so you can, if you become one of our top community sharers, we have a few prizes. And if you become really a top community sharer, you get Trade Machine for free. How do you like that? Okay. Do you have any eyeball technicals? Okay, so we're probably adding vol percentiles. That's probably what's coming next. I'm going to send a poll out February 1st, and I think that's what's going to come next. By the way, well, it doesn't matter. Yeah, so I think we're going to have IVR coming up soon, which is, it'll look kind of something like this, probably be in this window, like off on IV percentile, above, below, and then, you know, between 0 and 100. And you can start testing a volatility. That's just one of many things that's coming. I think we're also going to make it so you can back test 10 stocks in a row. So like a row of 5, a row of 5. These are just some little tweaks we have. All right, guys. I think I've said all I can say. And then there's another question. Is there an option to scan hourly moving averages? Can you scan moving average that we define? No, so the moving averages right now are simple moving averages, and they're daily moving averages. Obviously, we're going to start adding much more robustness to our technicals, but we got to make sure it works first. Besides some of the big names, do you have other favorite stocks? Yeah, my favorite stocks are the ones that just keep on winning. So like Regeneron is a great one it's a biotech, great volatility stock. You know, lots of stocks like that I find. Shopify, great volatility stock when the right triggers are met. So a lot of those little ones, smaller tech stocks like Coherent. Yeah. Okay. I think that's it. What do you think, John? Have I done my job?
Yeah, I think that's good. I mean, I think at this point, guys, if this is something that you like, the idea is, you know, just start test driving it. Like Ofer said, you can try it for 30 days. If you don't like it, you can get a refund. I think you're going to love it. It's one of those things where typically when we show this to people, they'll see it and immediately grasp the value of it, or it's like, that's not really for me. But if you're not sure, just try it out. You know, you'll find out in a couple weeks. Do a couple trades. I find it priceless. So it's just one of those things where it really changed how I looked at earnings, especially. But just the idea that you can test, you know, going into earnings, like, is it better to buy a long call or sell a put or buy a straddle or buy a strangle? Because if you don't have the back test results, you're just guessing. And if you're just going to guess, you know, that's not really trading. That's you can do that on a roulette wheel in Vegas. And so this is all about increasing your edge, increasing the probabilities of success. And this is just one of those tools that when we came across it, it was a little mind-blowing, honestly. And so, you know, we just like to share when we find good stuff like this, just make sure that if you weren't already aware of it, making sure that you're aware of it so you can at least know its existence. And then from there, if it makes sense to make it as a part of your repertoire of trading tools, there you go. So again, I think it's great, and I certainly highly recommend it.
Cool. Thank you so much, John. All right, guys, thank you so much for taking the time to join us and to let me speak with you in the evening. I think you should try it. And if you don't like it, you know, you can get yourself a refund. I really hope any software you subscribe to, if it's $89 a month, that, you know, you're making much more than that trading, at least on average. Everyone has bad months. So if I'm up 10 out of 12 months, I'm considering it a good year, a very good, well, 11 out of 12 is a very good year, 10 out of 12 is a good year. And, you know, I think that if you apply some rules to your trading, follow people like John Carter, use tools like ours, that's the place that you're headed to, you know, but you will never be profitable in every trade. There's just no such thing. At least I've never seen it in my life. And actually, if you're profitable in every trade, you're probably not taking enough risk. How do you like that? Ophir, I got a warning. Oh boy. Okay, hold on. Now I'm compelled to check the warning because I can restart the server. Hold on. Oh, try again, HW. It should be fine. Oh, where are you? Oh, you're on the scanner. Okay, I'll restart the scanner. Okay. Yeah, no, we're good. How long is the learning curve? How long is the learning curve for user? You know, that's really up to you. If you go on the FAQ and dedicate, I don't know, in a span of 3 days, 2 hours, so like 40 minutes a day for 3 days, unless you really want to do it all in one day, just watch a few videos, right? They're in the order. Their order is on purpose. If you watch these videos, you're going to become a pro at using this software, and you're going to have a leg up. You really will. I wish some of our members would have watched all of these movies, but they haven't. But that's okay. I mean, you do what you got to do. But all right, guys, have a great night. And thank you so much for listening. And thank you so much, John. Thank you all the time. Thank you.
Have a great night, everybody. You too, Ophir. And thanks, Ophir, for joining us tonight. And talk to you soon.